In the annals of Wall Street, few names shine as brightly as Peter Lynch, a man who demystified the complex world of finance. Lynch wasn't born into wealth or privilege, but he possessed an extraordinary ability to see value where others saw only the mundane. His journey proves that the greatest insights often emerge not from esoteric models or insider information, but from a keen observation of our everyday lives. He showed us that the path to financial success isn't exclusively for the initiated, it's open to anyone willing to look closer at the world around them. This is the story of an investor who transformed the ordinary into the exceptional, inspiring countless individuals to trust their own perspective and pursue their financial aspirations with confidence. Peter Lynch's story begins far from the bustling trading floors, rooted in a humble background that shaped his pragmatic worldview. As a caddy at a golf course, he listened to conversations among successful executives, absorbing their business insights and unknowingly laying the groundwork for his future. This early exposure to the minds of business leaders, paired with his innate curiosity, instilled in him a foundational understanding of economics and enterprise. It taught him that valuable knowledge is often shared informally, in places you least expect it, preparing him for a career where he would seek out unconventional sources of information. His early experiences underline the power of simply listening and learning from your surroundings, a skill accessible to everyone. Lynch's career trajectory saw him land at Fidelity Investments in 1966, initially as an intern, a stepping stone that would lead to unprecedented success. Fidelity, a burgeoning investment firm, provided the perfect environment for his burgeoning talent. He quickly distinguished himself with his rigorous research and analytical prowess, earning a full-time position. This pivotal move illustrates how taking that first step, even a modest one, can open doors to monumental achievements. It's a testament to the idea that perseverance and dedication in any role, no matter how entry-level, can pave the way for extraordinary growth and impact. His early days at Fidelity set the stage for a revolution in mutual fund management. By 1977, Peter Lynch was appointed manager of the then-obscure Fidelity Magellan Fund. It was a modest fund, managing just $18 million in assets, a fraction of what it would become. This appointment wasn't just a promotion, it was an opportunity, a canvas on which he would paint a masterpiece of investing. He embraced the challenge with an unwavering belief in his unique approach, understanding that a strong foundation and clear vision are essential for any significant undertaking. His story demonstrates that even with humble beginnings, visionary leadership can transform potential into unparalleled success. The Magellan Fund's trajectory was about to change forever. Lynch's genius lay in his ability to connect the dots between everyday experiences and investment opportunities. He famously advocated investing in what you know, in products and services you use and understand. He urged investors to look no further than their local mall, their grocery store, or even their workplace for potential winning stocks. This pragmatic approach empowered ordinary people to become savvy investors, bypassing complex jargon and trusting their own consumer insights. It taught us that the market isn't a secret garden, but a reflection of the world around us, inviting everyone to participate and find their own path to financial understanding. A cornerstone of Lynch's philosophy was the coffee can approach, a testament to the power of patience and long-term thinking. This strategy encourages investors to buy good companies and hold them for many years, resisting the urge to check prices daily or react to market fluctuations. It's named after the old tradition of stashing valuables in a coffee can and forgetting about them. This mindset frees investors from short-term anxieties, allowing their investments to compound and grow over time. It offers a powerful lesson: true wealth is often built not through frantic trading, but through calm conviction and the simple act of letting time work its magic. Lynch's ability to translate consumer experiences into investment decisions was truly groundbreaking. He wouldn't just buy a stock, he'd buy the company behind the popular product or service he observed thriving. If his wife loved a particular pantyhose brand, he'd research the manufacturer. If his kids raved about a new toy, he'd investigate the toy company. This direct, grassroots research provided him with an early advantage, often before Wall Street analysts caught on. It underscores a vital lesson for all of us: your unique perspective as a consumer is a powerful analytical tool, offering a tangible connection to market trends that can lead to profound financial gains. While many investors chase trendy, high-profile stocks, Lynch looked beyond the headlines, seeking out companies that were often overlooked or misunderstood. He had a knack for finding hidden gems, solid businesses with strong fundamentals that were simply unpopular. This contrarian streak allowed him to buy quality companies at attractive prices, before the broader market recognized their true potential. It's a powerful reminder that conventional wisdom often misses the best opportunities. By cultivating an independent mind and resisting the herd mentality, you too can uncover undervalued assets and build a portfolio designed for long-term outperformance, trusting your own research. Lynch consistently emphasized that patience is not just a virtue, but a necessity in investing. He understood that true growth takes time, and that the market often tests an investor's resolve with temporary downturns. His strategy involved thorough research upfront, followed by unwavering conviction to hold through volatility, allowing the underlying business to flourish. This disciplined approach shielded him from the common pitfalls of emotional selling and chasing quick gains. It offers a profound lesson: success in investing, much like success in life, often comes to those who are willing to wait, nurture their decisions, and let their efforts compound over a significant period. Under Peter Lynch's stewardship, the Fidelity Magellan Fund became an unprecedented success story. Over his 13-year tenure, it grew from a modest $18 million to an astounding $14 billion in assets. This monumental growth wasn't just about managing money, it was about managing belief in his method, belief in the power of diligent research, and belief in the everyday investor's ability to spot winning companies. The fund's expansion became a beacon, demonstrating that a disciplined, understandable investment approach could yield truly spectacular results, inspiring a generation of new investors to explore their own potential in the market. The numbers speak for themselves. From 1977 to 1990, the Fidelity Magellan Fund achieved an average annual return of 29.2%. To put that into perspective, if you had invested $1,000 with Peter Lynch at the beginning, it would have grown to over $28,000 by the time he retired. This extraordinary performance cemented his legacy as one of the greatest investors of all time. These figures aren't just statistics, they are a powerful testament to the transformative potential of consistent, well-researched investing. They prove that with the right approach and unwavering commitment, truly remarkable financial outcomes are within reach for those who dare to apply themselves. Lynch's track record wasn't just impressive, it profoundly challenged the notion that only Wall Street insiders or complex algorithms could beat the market. He consistently outperformed professional investors and major indexes by applying principles accessible to anyone. His success demonstrated that individual research, coupled with common sense and patience, can be a formidable force. This realization empowers every aspiring investor, reminding them that they possess unique advantages: the ability to observe their local economy, react quickly, and ignore the noise. You don't need a Bloomberg terminal to make informed decisions, you need a curious mind and the discipline to follow through. Peter Lynch effectively democratized investing, shifting the narrative from an exclusive club to an open field. He argued that the ordinary person, armed with curiosity and an open mind, holds a distinct advantage over institutional investors. They aren't constrained by rigid rules or the pressure to perform quarterly, allowing them to take a truly long-term view. His work instilled confidence in everyday individuals, proving that a stroll through a shopping mall could yield more valuable insights than poring over complex financial models. This legacy encourages each of us to trust our perceptions and leverage our unique positions as consumers and citizens to inform our financial futures. In 1990, at the pinnacle of his career, Peter Lynch made a remarkable decision. He retired from managing the Magellan Fund at just 46 years old. He stepped away not due to burnout or failure, but to spend more time with his family, demonstrating a profound understanding of life's true priorities. His departure, while surprising, reinforced his philosophy that even the most successful endeavors must be balanced with personal well-being. It serves as a powerful reminder that wealth is a tool, not an end in itself, and that defining your own success often involves knowing when to transition to the next chapter of your life, with purpose and peace. Even after stepping down from Magellan, Peter Lynch continued to be an influential voice in the investment world through his books and philanthropic work. His teachings, particularly One Up on Wall Street and Beating the Street, remain essential reading for aspiring investors. His enduring legacy is not just in the incredible returns he generated, but in the accessible, empowering framework he provided for anyone seeking financial independence. He showed that you don't need a finance degree to be a great investor, you need curiosity, observation, and a willingness to do your homework. His message continues to resonate, inspiring millions to take control of their financial destinies. Peter Lynch's principles are more relevant than ever in today's rapidly changing market. In an era of endless information and fast-paced trading, his emphasis on understanding what you own, conducting thorough research, and maintaining a long-term perspective offers a crucial anchor. He teaches us to cut through the noise, trust our fundamental insights, and apply common sense to our investment decisions. This approach cultivates not only financial success but also confidence and independence, encouraging us to forge our own paths rather than blindly following trends. His wisdom reminds us that the greatest market advantage often lies within our own well-informed judgment. Lynch empowers every individual to recognize their unique edge as an investor. You are a consumer, a professional, a neighbor. Each role gives you insights into different companies and industries. Instead of feeling intimidated by Wall Street, embrace your perspective. Do you notice a new restaurant chain always packed? A particular software dominating your workplace? These are the signals Lynch taught us to heed. By connecting your personal observations with diligent research, you unlock a powerful advantage. This is your invitation to actively participate in the market, transforming your daily experiences into opportunities for financial growth and self-empowerment. Peter Lynch didn't just manage a fund, he built a philosophy that continues to inspire millions. His message is a powerful call to action that anyone, regardless of their background, can become a successful investor by simply paying attention to the world around them. With curiosity, patience, and a commitment to understanding what you own, you can navigate the complexities of the market and achieve your financial goals. His journey encourages us all to look for opportunities in plain sight, to trust our judgment, and to build a future of financial independence, one informed decision at a time. The path to investing success begins with you.